realizations have been weaker than expected. With the long steel prices not falling as much as the flat prices, the street expected that a company like yours with a tilt towards long would do better. So tell us, what exactly did you witness in Q4?
So first let me also start this interview, and let me mention that this financial year, because it's also an end of financial year, this financial year I think the results are quite good. The way we think it's very positive. Our turnover has gone up by 58% on a standalone basis. The EBITDA on a standalone basis has gone up by 51%, and our production rate on a standalone basis is already at 6 million plus. On a consolidated basis, the production is almost close to about 8 million ton. So all in all, I think that there are lots of positives as far as results are concerned. Now, it is absolutely correct that this last quarter, the EBITDA per ton, if you look at it, that was under pressure. I mean, the reasons were several. Number one is, you remember that in the month of December, there was a major dip in the prices, and also that continued till early part of January. Now, obviously, and then after that there was some improvement.
Right. Mr. Ansari, if I may come in here, your coal costs have been higher for the most part of Q4. Despite that, your power business has delivered a profit. So how did the input cost impact your power operations and steel as well?
So the steel, the overall iron ore prices had come down a little bit. So there was some benefit out of this 1200. There was some benefit which came out because of the, the iron ore cost, which came down by about 400 rupees or so. So that was some benefit. But 800 rupees came because of the operational efficiencies and so on, which was brought in by the system as far as the steel is concerned. As far as power is concerned, you saw that the coal prices were a little high, and that obviously impact a little bit negatively in terms of the margins which are there. But going forward, we also have a lot of hopes as far as power business is concerned, because there are some additional PPAs which are likely to happen. In fact, some we have already won, and some are still to come to the market, which are to be quoted very soon. So in the later part of year, we do expect that the power business should have much better PPA, and those PPA should come along with the coal attached with it, coal linkage, and that should certainly help us substantially.
Your debt figures have come down, but there have we've seen a rise in your interest costs Q on Q. We understand there's an element of interest paid to JPL for the sale of certain captive power plants. Could you explain that transaction?
So, this first thing, you're absolutely right. Our overall debt has come down by about 4,000 crores. And you remember that we had already said that in financial year 2019, we intend to cut it down by about 4,000 crore. We are happy to report that we have already done that. And going forward, we also expect to cut it down by another 5,000 crore. As far as the current interest cost is concerned, there was a loan which was given by JPL to JSPL quite some time back. So far there was no interest which was being payable or paid, but then subsequently it has been decided along with all the lenders and others that there is a certain amount of interest which is required to be paid by JSPL to JPL, and that is what is shown in our books. So this interest will be on a yearly basis. This interest will be charged. That is how you see that interest burden to be a little more. So this is what is the basic objective.
Thanks so much for joining us.